Welcome to Explain the Charts, where today, August 1st, 2025, we're undertaking a critical examination of Intel Corporation, ticker symbol Intel. The past year has been a tumultuous one for Intel, marked by significant strategic shifts and challenging market conditions. As we begin our analysis, let's look at the daily chart, which provides a broad overview of INTC's price action over the last several months. First, let's address the major news impacting Intel. A critical development was the announcement prior to August 1st, 2025, that NVIDIA would replace Intel in the Dow Jones Industrial Average, a symbolic blow underscoring NVIDIA's dominance in AI. This move sent a strong signal to the market about Intel's waning influence in the high-growth semiconductor sector. Compounding this, Intel reported an adjusted loss of 10 cents per share in Q2 2025, a stark contrast to a profit in the same quarter last year, which immediately sent shockwaves through the market. Furthermore, 3 senior executives in Intel's manufacturing division are retiring amidst a restructuring effort, suggesting internal challenges. CEO Lip-Bu Tan himself admitted the company invested too much, too soon, in its foundry business, without adequate demand, a candid but concerning statement. Construction on their cutting-edge chip factory in Ohio has been slowed, contingent on market demand and securing new customers. While they aim for high-volume manufacturing of Panther Lake PC chips with their 18A process later this year, and analysts project profitability in 2025 and 2026, the short-term news is heavily bearish. They're also slashing foundry costs and planning to spin off their networking and communications business, which are attempts to streamline but also indicate a struggle to right the ship. Now, let's see how these headlines translate onto the chart. Looking at the daily chart, we can clearly see the significant downtrend that has gripped Intel over the past year. Notice the sustained selling pressure and the formation of lower highs and lower lows. The price was trading around the $42 to $45 range in March-April 2024, showing initial stability. However, a critical breakdown occurred around late July and early August 2024. Let's zoom in on that period to see the impact of the Dow Jones replacement news. Observe how the candles plummeted during this time, indicating intense selling pressure and a major shift in investor sentiment. The price crashed from the $30s to the low $20s, with a massive increase in volume confirming the conviction behind this move. Following this sharp decline, Intel entered a period of consolidation at significantly lower price levels. There was a notable rebound in February 2025, with the stock rallying from the high teens to nearly $27.40. This strong move was likely driven by short covering and perhaps some optimism regarding future product roadmaps like the 18A manufacturing process. However, this rally met strong resistance around the $27 to $28 level, a crucial ceiling that the price failed to break. Subsequently, the stock resumed its downward trajectory, indicating that the underlying bearish sentiment remained dominant. The volume during this upward surge was high, but not sustained enough to push beyond critical resistance. Now, let's focus on the most recent events, particularly the impact of the Q2 2025 earnings report released on July 24, 2025. Prior to the announcement, the stock was attempting to stabilize around the $23.50 mark. However, the negative earnings surprise triggered another significant bearish move, sending the stock down sharply. We can see a clear gap down and a large red candle on July 24th and 25th, breaking below recent support levels around $22.50. The price quickly retested the low $20s, a level seen previously in late 2024 and early 2025. This confirms that the market reacted very negatively to the financial results, signaling continued investor concern over Intel's current performance and immediate future. To get a clearer picture of the immediate price action and sentiment, let's switch to the 15-minute chart, as our 1-hour data is not as current for these very recent movements. Looking at the last few days of July 2025, we observe that Intel has been consolidating in a tight range, primarily between $19.70 and $20.70. The trading volume has been elevated on the downside moves, and we can see attempts by buyers to push the price up, but these have been met with swift selling pressure. This suggests that overhead supply remains a significant challenge, with sellers stepping in quickly at minor resistance levels. The current price of $19.80, based on the last daily close, is very close to the recent lows established after the Q2 earnings report. A key price level to watch short-term is the $19.70 support level. If this support breaks, we could see a quick move towards the $19 or even $18.50 area. On the upside, immediate resistance sits around $20.20 to $20.40, followed by the $20.70 area, which has served as a pivot point. A strong break above $20.70 on significant volume would be an early bullish signal, potentially targeting the $21.50 range next. Considering both the fundamental news and the technical chart patterns, the short-term outlook for Intel remains predominantly bearish. The negative earnings, executive departures, and slowdown in key factory construction are all weighing heavily on the stock. Traders looking to go short might consider entries on rallies towards the immediate resistance levels, targeting further downside if support breaks. A stop loss above the $20.70 mark would be prudent for such positions. Conversely, for short-term bullish plays, extreme caution is advised. A bounce could occur from current oversold conditions, but it is likely to be a relief rally, not a trend reversal, unless there's a significant positive news catalyst. Entering a long position would require confirmation of a sustained break above $20.70 with strong buying volume. The daily relative strength index on the one-day chart, while not provided explicitly, would likely be in oversold territory, suggesting a bounce is possible but not guaranteed. Long-term, Intel presents a high-risk, high-reward scenario. The company's focus on its 18A manufacturing process and analyst predictions for future profitability offer a glimmer of hope for a turnaround. If Intel can successfully execute its restructuring, secure new customers for its advanced processes, and show consistent revenue growth in its core businesses, then the current low price could be seen as an attractive entry point for patient, long-term investors. However, this is contingent on significant improvements in demand and operational efficiency, which CEO Tan's recent comments suggest are still distant. Investors should closely monitor future earnings reports for signs of improved financials and news regarding the 14A process and Ohio factory for demand indicators. Any substantial contract wins or positive updates on chip production could ignite a rally. Conversely, further negative guidance or delays would deepen the bearish sentiment. For swing traders, key levels to watch are resistance at $20.70, $21.50, and then the $23 to $23.50 area from the earnings crash. Support levels are $19.70, followed by $19 and $18.50. Breakouts or breakdowns from these levels on high volume will dictate the next price movement. Ultimately, Intel remains a stock for traders who understand the high volatility and are prepared for rapid price swings. The market is clearly signaling distrust in Intel's immediate future, but the long-term potential hinges entirely on successful execution of its ambitious turnaround strategy. Keep these levels in mind, stay informed, and trade wisely. Thank you for watching Explain the Charts, where we empower you with data-driven insights to navigate the markets.